This is just AMZN on Monday, October 14th, 2019. Had a really nice triangle sort of shape today that broke out bullish right at 1727.80. I say kind of because it made lower highs, and it really kind of did that, but it made the same exact low here, so not really higher lows. And then this made higher lows. So it was kind of hard to draw an actual triangle on what it did today. If you try to draw it, it looks something kind of like this into the apex here. And then I don't really know what to connect here because it's not like that. You know, it's more so just connecting maybe these, something like that. But that doesn't really look like a normal triangle at all. But either way, however you draw a triangle here, or draw some sort of consolidation, this thing went sideways for a long time. Like, you had plenty of time to like study, investigate, figure out, plan, analyze, all those things, and you probably still, took it bullish here just for it to pull back. You're like, oh, I'm so stupid. It's, it broke out and then it didn't. It was a false breakout. It's just going to move against me. I'll get out. I'll go out. Okay, it's starting to go here on this candle. I'll get out now, just to see, 15 minutes, 20 minutes later, it starts to run. Something like that. That goes through your mind when you're watching it. So, don't watch it, set up the trade and just let it go. Just leave it alone. And had you done that in here bullish, it should have worked out. If you did it in here bearish, you got stopped out. So hopefully you lost less than an R getting stopped out. But it's a bearish retest gap. It gapped down on the daily. It's a little easier to see. It was a bearish retest gap, just a small gap down. Opened on the daily at 1728.91, but on the 5-minute, it looked like it opened at 1727.01 on this. Nope, that's the wrong candle. Sorry. No, it is the right open, 1728.91. Okay, so it opened here and then flashed down, ran back at 1 hour, flashed down, 10 minutes down, 30 minutes back up, another 20 minutes down, 30 minutes back up. It's just kind of zigzagged here and looked like it was going to form either a double bottom here and, really start to break out, or it was going to roll over from here because we're right below yesterday's wick down and then the close. And it started to, and then it just went sideways. And that's what's phenomenal about this, that, it just gave you so much opportunity to look at the options and figure out, okay, what am I going to do when it moves? Because it can't just stay here forever. So looking at when it started to move, either 11:55 or 12 o'clock, let's look at the calls. This is the 1750 call right here at 11:55, 12 o'clock. It's actually starting to break out. You really could have traded this getting in 6 by 5, $100 risk right here. Get in 6 by 5, probably got filled a little bit below here because look at this 12 o'clock candle. Even though the 12 o'clock candle is way up here, it's almost to 1730 already. You broke out bullish above all of this. It doesn't have to retest. I mean, if you had a pullback, had a setup for a pullback, maybe up here, but the price didn't come down very far. This, if you had gotten this set up 6 by 5 and hit send here right as this is closing, maybe you got it filled here, and then it just ran with you, which would have been great. Really nice move, bullish. It gave you a really nice S-curve entry where you could have been getting in even way up here. Would have been nice if it pulled back a little further down to, say, 7 into the high here. It just didn't do it. Didn't have to. Pulled back into the high, the upper wick here, and stayed above yesterday's lows, or Friday's lows. But then started to break out again. And even as this broke out again, so let's look at 1240. The 1240 candle was right here. This one you could have still been getting in on 850 by 750 maybe, or probably 850 by 750, or maybe a little below that. Probably be something like 850 by 7. So that would have been a little bit tight to do with $100 risk. But even if you were looking to get in 850 and you had your stop at 750, it didn't come back down here. And it continued to run. And either of these trades, either from down here, waiting for it to break out, you got in at 6, you get out at like 10, or didn't know how high this was going to run, probably into the lows, excluding the close and excluding the lower wick. So this is your next resistance. Well, that's really where it stopped. So, right here, this price, you're $15 out of the money. And oops, I clicked the wrong thing there. So let's see. Going back over to the options, probably would have been exiting 950. So getting in at 6, getting out at 950, that's still 3R. That would have worked. And then this one, as it pulled back here, breaking out, it should move up further. It didn't really have a clear place to run all the way up to where it stopped. It started to show some indecision here. So you would have had to been watching it to get out up at the high. So probably this one, because it moved so quickly, did the S curve, getting in, say 850 by 750, probably looking for 2R, going from 850 up to 1050, get a little bit above this one. But I don't know if you would have held all the way to 1150 and exited at 1150 on those indecision candles. That was possible, but that would have been, also a 3R move. And then puts, this is the 1700 put, just really lost value all day long. When it had this wick up here, if anybody was shorting this, because it really did come right back to this low from Friday and rolled over. So had you had an order just sitting here waiting to get in bearish on that price, either here or here, the put was much more expensive here, around $7, and then over here was under 6, but it only moved like $1. I mean, if you caught the bottom, the low here being 557 and the high here being 774, there's a chance you could have had 2R. You risk $100, get back 200. That's the full amount, but that would have been really buying the low and selling the high to get that. Very unlikely to do that, especially when the price has already dropped from around 7 to around 550 over the course of half an hour here, as it's pulling back, rolling over from being bearish, spiking up here and then rolling over again. So anyway, some good opportunities to go bullish. Towards the end of the day, it was forming this kind of double top up here. We're still below 1747. It'd be really nice to see a move up above that and get past the 21 exponential. That could be coming. Also, the comparison I was doing the other day showing this kind of block of candles looks like we're doing something a little different. So obviously, with the gap up that we had Friday and fade, and then the gap down and buy up that we had, these two candles is opposite of these two candles. Had the bearishness come in, and then the bullishness, had the bullishness come in, and then the bearishness. So something's kind of shifted here. I still really like 1747 as a retest point and as a bigger S curve here. But right now, this thing's just going sideways. And it's really very similarly sideways to back here. So go back to this, see what you would have done, what you would have had to wait for in terms of what was happening in the options and time frames. And, it gets harder on a 5-minute. That was the only thing I was going to look at today. If we zoom out and we just look at like an hourly, today had very little bearing on anything. But right down here. In this view, you can see this looks much more like some sort of accumulation. It looked like it was starting to break out and then came back into its own distribution here. Now we're down here. We're doing the same sort of thing. This sort of choppiness is just some distribution. This kind of choppiness is just some accumulation. Soon here, we should have a move up or down. But right now, we're really range bound in this zone here. I mean, we have been. And so it's a really tight zone. It gets hard to trade directionally. and that's really similar to what we did back here. We had the squeeze forming all through this, which was nice. That was February of earlier this year, but we don't have a squeeze forming yet, and so it could be going sideways for a little longer to do that. We did have volume higher than we had. Volume back in February was higher than we have now, so it's just really interesting. We got this big drop off in volume with some spikes on some of the bearish candles, I believe. Yeah, it just doesn't. It doesn't feel like it's about to just go unless it gaps down. We need a good gap to clear through this, because just this choppiness is keeping us range bound in here, and so it's a good opportunity to go short from 1747. It's a good opportunity to go bullish from 1714.50 or really anywhere below that. We'll just see if we get some opportunities to do that and see if we continue to be range bound here much longer. I don't know how much longer that could be. But in the last couple months, we've seen just a bigger sell-off, and that's why I've been anticipating a continuation of that sell-off, because it really hasn't recovered in a way that shows you, hey, it's bullish again. It's still really weak and looks more bearish than bullish right here. So back into the 5. Well, let me switch back from the hourly to the 5. For tomorrow, we'll see if we can get a run up right into 1747 and another rollover. Or if we do something where we gap down again, look for this price to be in contention. And even as a retest and then a bounce, could even do that too. But we'll have to wait and see what it ends up doing. Hope you enjoyed this video. This is just AMZN. Thanks.